Hi, I'm Andrew Howard, Chief Investment Officer at Catholic Super. Like many of you, we're watching events in the Middle East closely. Geopolitical conflict, such as what we're experiencing right now, is unsettling, and when tensions rise, financial markets often become more volatile. This is occurring right now in markets. They are moving sharply on headlines, sometimes up, sometimes down, often within very short periods of time. What's important to remember is that volatility in response to global events isn't unusual or new. What is consistent, however, is how markets behave over time and how investors react during times of crisis. It's natural, during periods like this, to wonder whether this time is different or whether as an investor, action is required. But if we look back over time, markets have faced many shocks, from pandemics and inflation spikes to global conflict destabilising the historical world order. We aren't saying that there's a clear end to current affairs. However, we do want to illustrate that once markets have historically factored in the impacts of such events, they tend to look ahead rather than backward. This forward-looking behaviour often reflects expectations of recovery. Being aware of such a trajectory is important when investing for the long term. I'll take you through how markets move over time and show that the volatility we're seeing in markets right now has happened before. I'll highlight how the decisions you make today can have a profound impact on your retirement savings over the long term. We compare two members over the same 10-year period who both start with a $100,000 balance invested in our balanced growth option, with one critical difference. The first member stays invested the entire time in balanced growth, through market falls, recoveries, and everything in between. The second member switches out of balanced growth at the worst possible moment during the lowest point in 3 major market drawdowns, and then only switches back into balanced growth once the equity market has recovered all of its losses. You'll see this switching occurred during 3 distinct and very different periods. The first being the onset of COVID back in early 2020, the second being during the inflation-driven sell-off in the first half of 2022, and the last event being Liberation Day, which occurred only last year on the back of President Trump's tariff announcements. The outcome is stark. The member who remained invested finishes with around $363,000. The member who switched during these 3 market events has a balance of about $286,000. That's a difference of more than $77,000. Real retirement savings lost, simply because of the timing of those switching decisions. In one sense, this is an extreme reaction to periods of significant market falls. But we do see this type of reaction occur a lot, even during times when the market falls are more subdued. No matter the event, it's the response that matters most. Whether the event is happening today, last year, or 10 years ago, reacting to short-term noise and switching at the wrong time can have permanent and long-lasting consequences for your super balance. We're very conscious that the market we're in right now may be an anxious time for many. Our message to you remains consistent and backed up by history. It's time in markets, not timing markets, that counts. Markets will always have shocks, such as geopolitical events, inflation spikes, or recessions. We've been here before. Diversification is key. A variety of investments means a portfolio that isn't overly reliant on one outcome. Maintaining asset allocation shape and ensuring that we have robust levels of liquidity for times such as this is critical. And being a patient investor with a long-term focus has been proven to deliver for our members. The evidence is clear. Disciplined, diversified, long-term investing remains the most effective way to build retirement savings. Our role is to manage your money through all market environments and to help you avoid decisions that may feel protective in the moment, but can materially impact your long-term retirement savings outcomes. If you're feeling uncertain or tempted to make changes, we encourage you to contact us and take advantage of our range of member services that are always available to you. Thank you for watching.